All right, traders, I ended up going red to green on the day. And with that being said, I'm going to share with you what I ended up doing right, and I'm going to share with you what I ended up doing wrong. I made several trades today. And with that being said, what if I told you it was possible to capture a trend based off of history repeating itself? Meaning, if you can confirm that that history is going to repeat itself, you can profit based off the future's results. You would know exactly what was going to happen before it actually happened. So you could take advantage of that move. And I'm going to show you how you can do this in real time with the SPY, because this is what I ended up doing towards the middle to end of the day. And it made me over a 200% return on calls within 4 straight wins in a row. I'm also going to be sharing with you the mistakes that I ended up making today as well. Let's get straight into it. So first things first, we're going to go over the history tends to repeat itself type of strategy. This is a price action strategy, and what we're doing is we're identifying candlestick patterns and we're confirming that those patterns are going to repeat itself so we can take advantage of that history repeating itself, right? The beauty of using a trading strategy that is based off of history repeating itself is you know exactly what's going to happen before it actually happens. So today was an exact repeat of yesterday. And if you were able to take advantage of that by identifying that it was an exact repeat of yesterday, you could have done very, very well on call options like I ended up doing towards the middle of the day. So I'm going to show you how to do this. This is yesterday's chart, and this is what I want to take. This is what I want you to understand, right? So I'm going to show you how to do this, right? We're going back throughout the history. We're identifying patterns. Once we see the pattern, we capture the pattern. We confirm that that pattern is going to repeat itself, and we take advantage of the history repeating itself. So take a look. The previous highs on the SPY were at $400.35. The SPY ended up going up in the morning, and then it retested the previous day's highs. And then once it retested the previous day's highs, it started forming a floor. It started forming support. It formed a bullish candlestick on the 30-minute chart. So in terms of this strategy that I'm sharing with you, it is a 30-minute chart strategy. You can do this with other time frames as well. I prefer the 30-minute. And with that being said, the 30-minute time frame, you can scalp this very, very quickly for 15 to 20 minutes on zero-date expirations and make a very quick 30 to 50% return on that with at-the-money strikes, right? So the point I'm making is, what did SPY do yesterday? SPY went up, it retested the previous day's highs, and it bottomed at the previous day's highs. It turned that previous resistance right here, this previous resistance into support on the 30-minute candle. And then that was the floor. The bottom, the floor, the low was the previous day highs. Now look at today. It did the same thing. Not only did it do the same thing, but it did the same pattern. This is where it gets very interesting. So if you can identify these patterns and capture these trends in real time, you can profit off of this history repeating itself, and you can continue to profit off of that history repeating itself until it no longer works. Once it stops working, then you just call it for the day. You can hit a crazy win streak doing this. So I want you to take a look at this, right? So what did the SPY do today? The SPY ended up pushing up. It ended up going higher. Now look at this trend. Just look at these candlesticks. Green, red, green. Right there is the exact bottom at the previous day's highs. And then take a look. Green, red, green. Right here is the exact bottom at the previous day high. See how history is repeating itself? Do you see this green, red, green pattern, this green, red, green pattern, and see how the bottom of that third green candle and the bottom of this red candle in the middle is at the previous day high? See how this is at the previous day high? So what you should be doing is, and we caught on to this very, very early. I called this out right here when SPY was towards 404.90, and when it turned the previous closing price into support, that's when I started up buying calls. And I was buying every single dip on every 30-minute candle because history kept repeating itself. You have this green, red, green pattern, and then what does SPY do after that? Green, red, green. What does it do after that? 3 green candles in a row for the 30 minutes. It goes up for an hour and 30 minutes straight. It goes up for an hour and 30 minutes straight. Do you see how that history is repeating itself? And this is where it gets even more interesting. Take a look. You have this green, red, green, the same pattern, and then what happens on that green candle? It goes up for an hour and a half straight. Green, red, green. It goes up for an hour and a half straight plus. Do you see that? You can capture that in real time. See how the pattern is forming at the previous resistance, forming higher support. See how this new floor is forming at this previous resistance with the green, red, green, with the green, red, green, and then it takes off for an hour and a half, takes off an hour and a half. I identified this pattern in real time. We brought this up very, very early, man. Let me show you in terms of the score band, in terms of the confirmations that I gave out. These are confirmations that I give out in terms of strong patterns that I'm seeing. I pointed this out at 11:34 a.m. Yesterday, SPY, the previous day high, turned it into support and it rocketed for new highs. The same thing just occurred at 404, which was yesterday's highs, along with the same bullish 30-minute pattern that I just shared with you. The previous closing price is also support, not resistance. This is all confirmation for new highs. The bull should win this. I said this very early on and mentioned this pattern. Not only did I, say that, but I bought calls 4 times within 2.5 hours of that pattern repeating itself, man. We had people screaming bearish. We're playing puts when it was at the top of the highs. I told them, look at the pattern. You should not be confident in puts because number one, the previous closing price reacted as a support level. And number two, it is giving every bullish signal and confirmation that's doing the same exact thing that it did yesterday, man. Look at this. Very, very simple. Very, very simple, man. Look, I can recap this in like 1 minute. Let's recap it in 1 minute. Look at this. The previous day's highs, right here at $400. Green, red, green, double bottom at the previous day highs. It shoots up for an hour and a half. Green, red, green at higher support, which was previous resistance above the previous closing price, which is bullish. And then it shoots up for another hour and a half plus. Look at the same exact pattern. Look at yesterday's high. $404. There's a floor, a double bottom, green, red, green. It shoots up for an hour and a half. Green, red, green, a higher support, turning previous resistance into higher support with this bullish wick at the floor. It shoots up for another hour and a half. Do you see that? That's how simple the SPY can be, man. So those are some of the basics, man. What you're trying to do is you're trying to analyze history repeating itself. If you were to identify that pattern that I shared with you, like we did very, very early, you should be extremely confident in calls when you see this bullish double bottom green candle come in for the 30-minute, and then you should start buying up those calls into the dips, not into the rips, right? The whole trend for almost the entire day was literally calls on dips. So that's the strategy and that's the pattern. And people ask me, what do you think SPY is going to close at? When SPY was at $405.50, they said, what do you think this is going to hit? What do you think the high is going to be? I told them $407.80. That's what I told them for the high for the closing price. It hit $408. And someone asked me about puts. I told them, if you want to play puts, wait till $407.80. That's the best price to play puts. Will, how did you come up with $407.80? Because I looked at the daily chart. If SPY breaks above 405, the next resistance level is at $407.86. It's very likely for it to go to a high of 410.49, right? So in a sense, that's why puts made sense. Now, here's what I did wrong. Now, the reason why I did this is I was trading the trend the whole day. So if you were to buy calls on dips yesterday, you would have made money all day. So what I did was, once I identified and confirmed that this trend was history repeating itself, right, and I captured it in real time, that's all I did. I just kept buying calls on dips, buying calls on dips, buying calls on dips. Every time I was buying the dip, the calls would shoot up 20 to 50% in like 15 minutes. And then I would sell into the rip, and then I would redo it. So I keep on doing it until it doesn't work. That's when I stop. Now, another thing to this is, right, you don't want to chase the exact top. This is where I went wrong. Into the close, I ended up doing another 0-date expiration. It was at $408. It sold off very hard to 407. I bought calls at 407 again because the dips kept printing and SPY closed strong at the highs yesterday. So I figured it would do the same thing, right? However, this isn't the most bullish trend reversal candlestick, and it's chasing, right? So the point is, you don't want to chase it too high at resistance. I was well aware it was extremely risky. The contracts were so cheap. They were like 30 cents. It wasn't a big loss. When I'm on a crazy win streak and I'm doing very, very well, like up 200% in terms of every single trade that I make combined together, once I have a loss, I scale down in size. Once power hour hits, I scale down even more in size. The contracts are a lot cheaper, and they're cheaper for a reason, because they're extremely high risk, but the returns are absolutely insane. So I put in less capital. I protect my profits. I'm not going red to green, back to red on the day. I'm protecting my profits in a sense, and I keep on doing it until it doesn't work. But obviously you don't want to chase it. And like I said, These were pure lottos. These were pure lottos. These are lotto trades. These are not the best setups, the best prices. What I'm teaching you here is I'm teaching you how to read price action. And you can use this read of price action to profit at good prices, to understand where the market is going, to trade the best setups, the best prices. You can combine what it is that I'm teaching right here with the best setups at the best prices, right? But I went very, very aggressive and it worked out. And like I said, man, if you were to just buy dips for literally the entire day for the most part, they absolutely banked if you recognize this pattern. So that's what I want you to do. I want you to start identifying patterns. I want you to start capturing patterns. I want you to start confirming that that history is repeating itself. For example, green, red, green, previous day highs is the bottom, double bottom, and it starts to go up. You should be screaming calls. You should be extremely bullish because it's the same pattern. Green, red, green, and it turns the previous day high into support, the double bottom, and it starts to trend up. That's how we know that history is going to repeat itself, because we wait for that confirmation, we wait for the chart to develop, and we identify opportunities with this candlestick. It is truly incredible on how identical this chart is. And people don't know about this if they're not using the 30-minute chart. So I'm putting you onto the 30-minute chart. The reason why I love the 30-minute chart is I'm a scalper, and in terms of my average holding time with 0-date expirations, it's a couple minutes. It's about 5 minutes to 20 minutes, right? So the 30-minute time frame is perfect for me, because what the 30-minute candle is going to do is it's going to help you identify the next 30-minute direction of the stock if you're using it how I'm teaching you right here with the green, red, green, with the green, red, green, triple green. Green, red, green at higher, forming higher support, forming higher floor. Green, red, green, forming higher support at floor. Triple green, right? You see how simple that is? Do you see how simple this is in terms of capturing? But you have to wait, and you must identify this in real time. We had no idea that SPY was going to do this green, red, green pattern, and it was going to do the exact same thing as yesterday until it started to happen. That's when we had an idea. You have to catch trends early. If you want to get rich, you have to catch the trends early. So if you see this is the trend, and again, you need to think like this, right? So what was the bottom of SPY yesterday? It was at the previous day's highs. It bottomed at the previous day highs, right? So if it forms this green, red, green double bottom pattern at the previous day highs, what does the SPY do? It goes up for an hour and a half. Look, same pattern. Green, red, green. It's bottoming at the double bottom with the green 30-minute candle at the previous day high. Do you see that, man? When you see that, you need to be thinking, it's calls, it's bulls, it's bullish. And again, I also use the previous closing price. So in terms of the previous closing price, another confirmation that I used was I was looking at the 1-minute chart. I looked at the 1-minute chart combined with everything that I taught you, which is trend stacking, pattern recognition, identifying and capturing trends within real time that can history repeats itself. And I confirmed it with the 30-minute chart and everything that I told you in terms of previous day highs reacting as support with the double bottom and the green, red, green candle. And I looked at the previous closing price and I said, okay, SPY's breaking above the previous closing price. There's a floor. It already braked out earlier and it's pushing higher. That's very bullish. There's absolutely no reason for puts. So you tell me right now, if you're buying put options and you would have known about this pattern, which we called out extremely early and took advantage of, if you would have known about this pattern, the green, red, green on the 30-minute, previous day highs is now reacting as a double bottom, would you have bought puts or calls? It's calls, man. So that's the game. I just put you on, man. That's the game. You have to identify patterns. You have to catch trends. If you can catch a trend early, you can do very, very well in the market. In terms of, well, Will, how could you have caught that trend in terms of confirmation? When this 30-minute candle forms a bullish floor, you start buying those calls. It's bullish. When the previous closing price is forming support, you start buying those calls with that pattern. When the previous day's resistance is reacting as a floor, when the green, red, green pattern hits, when all that confirmation hits, we know history is going to repeat itself because the pattern was there. The green, red, green, previous day's highs, reacts as a floor, double bottom. So if this next 30-minute candle, see how this looks bearish, right? This 30-minute candle looks bearish. See how this 30-minute candle looks bearish? Well, the next candle went green and it bottomed at the previous day highs. So if it does that, now you know. Now you know what's going to happen. It's going to start to rocket. History's going to start to repeat itself. If it forms higher support above the gap, if it forms higher support above the previous closing price, green, red, green, green, red, green, now you know, here comes another rally. That's why I was screaming calls, man, right? So that's the game. Now, let's get into the mistakes because I didn't trade perfect. I did make some mistakes. It was a very high win rate and it was a nice day for me. I started off red, so let's talk about that. So in terms of me starting off red, I tried the gap close reversal strategy and it didn't work. Now, what I want to be very clear is it actually did work in a sense, but there was no confirmation. So I ended up doing the gap close reversal strategy without a confirmation, and I was up 20%, but I did not sell. You're supposed to sell when the options start to go in the money. So SPY gap down, it filled the gap. Once it filled the gap, it never reacted as a resistance. As soon as it filled the gap, it started breaking out, meaning there's no confirmation for calls, right? So if SPY is breaking above the previous closing price and it's breaking out, at some point it's going to pull back. When it pulls back, it's going to try to turn the previous closing price into support if it's breaking out and pushing above, which is make or break. So if the previous closing price reacts as a support level after it breaks out and pulls back, then it's super bullish, which is another reason why I like calls later on with that pattern and mentality combined, right? So I ended up playing puts when it was at $400.28. At $405.28. Right around here, I bought puts above the previous closing price. Why did I do that? Because I just told you SPY is likely to go back to the previous closing price to see if it's going to react as a support level or not, right? So I was thinking, it's above 405. It's likely to go under 405 very, very quickly. So if I buy a put out of the money on a 405 strike, I can make a quick profit once it goes in the money and sell. The problem was I didn't sell. The SPY crashed to $404.47. I bought the puts at $405.30. As soon as it hit, it instantly ripped right back up. I didn't sell. Now, here's a tip for scalping. You must exit quickly once you're out of money or at the money contracts start to become in the money very, very quickly. I'm scalping about 30 to 70 cent moves, right? Very, very quickly, 20, 30, 40% win, whatever it is, later in the day. If it's barely out of money to in the money, then it's bigger win, right? So that's what I'm doing in a sense, right? Now, what you have to do is you must know where you're going to sell before you sell. You must pre-fill out your order. If you're doing a limit order, you must be submitting that limit order well above the ask when you're buying and well below the bid when you're selling. That's what you have to do. Or you can do a market order. But if you're doing a market order, it must be a one-click button where the only thing you have to do is type in the quantity. And that must be pre-filled out. That is your only chance, or hot buttons, hotkeys, right? There's no other way to scalp this. If you are not doing that, what I just said, you cannot do the strategy. The order must be pre-filled out. It must be in a situation where all you have to do is click one button, right? So you want to be selling way below the bid. Not at the bid, because SPY's going to move and you're not going to get filled. Down tick, up ticks, right? Not going to get filled. If you're buying at the ask, not going to get filled. Down tick, up ticks. You got to get lucky. You have to do it. Buy well above the ask, sell well below the bid, or use the market orders. That's the only way you're going to get filled. And you'll get filled at a good price. You just got to be careful if it's like an FOMC day and the spreads are crazy. Do not do what I just said if you're trading an option with a very wide spread. But even with SPY's volatility, the spreads tend to be thin unless FOMC comes out and there's just crazy $1 spikes nonstop until it starts to balance out a bit, right? So as long as the spread's thin, do what I told you. That's the only way to scalp these, right? So I didn't use a confirmation and it worked, but I didn't sell. In the previous closing price, reacted as a support level. It bounced as soon as it hit the previous closing price, which is bullish. And then I got out as soon as it had its breakout at 405.60, right? So that's what I did, man. There was no confirmation, but it even worked without a confirmation. I just didn't exit. So if you want a high profitability trade, use confirmation. If you want a better entry, don't use confirmation, right? So that's the game. Now, with that being said, I hit puts again, and I made a 50% return on these puts, and I banked. I didn't stop there. So we waited for confirmation. The SPY was looking very, very bearish. My overall target was 404. It was forming lower highs. It was acting sloppy. It was looking very, very bearish. It was giving a lot of signals that we were going to go under the previous closing price. And if it goes under the previous closing price, then it's going to drop about $1, right? I was also looking at that red, green, red type of pattern. And I was comparing it to yesterday, man. It was just looking sloppy. It was looking overall bearish. You could see right here, this previous support reacting as a resistance, reacting as a resistance, reacting as a resistance. I played puts right here again when it was at 405.20. It instantly crashed, and I sold on the dip literally right here when this was at $404.10. I got out of that. That was a very nice quick 50% profit return on me. So I made some back. Then after that, it was call focused, man. It was call focused. I waited for the trend to develop and I took advantage of that pattern, and I kept buying calls every single time the new opening 30-minute of candle would open, because this pattern said that would be the low. See how the opening of this 30-minute candle is the previous low. See how the opening of this 30-minute candle is the previous low, right? So I kept buying calls at the opening of the 30-minute candle, right? So that's what I did right. And then I played the trend, the green, red, green again, the green, red, green with the nice uptick. I took advantage of all of that, right? Now, in terms of here's where I went wrong. I went wrong by getting a poor entry. And I was well aware of this. I sized in light. The contracts were extremely cheap. And like I said, the plan was to basically just keep on doing this until it doesn't work. And once it stops working, you just don't do it anymore, because that means the trend's breaking and the whole history tends to repeat itself theory is just not working anymore, and you got to stop doing it, right? So I got caught up in a bad trade here, but I didn't size in massively. This was at 3:50 p.m. I bought some calls and they dropped very, very quickly, right? Because SPY just got absolutely slaughtered. In terms of bearish confirmations, the reason why I bought those calls is because SPY closed strong at the highs. And like I said, I was just milking the trend. Complete chase, well aware, right? It's a lotto trade. Now, with that being said, in terms of bearish confirmations and reason why I shouldn't have done those calls, you have to have some sense and say like, okay, there's major resistance at 407.86. The trend's been working all day. Let's just ease the break. And if anything, try puts at 407.80. Like I told people, if you want to buy puts, buy at 407.80, right? Another reason is this isn't the most bullish confirmation. I should have been more aware of this. Take a look. You have this green trend reversal 30-minute candle, right? And then you have this green trend reversal candlestick at a higher resistance level. What happens after that? SPY sells off. What happens after that? SPY sells off. So do you see that pattern in a sense? When SPY was literally towards the highs with an overreaction to the upside, when SPY was literally towards the highs of the daily with an overreaction to the upside, sells off, trend reversal candlestick. So that's where I went wrong in terms of calls at the end of the day. But regardless, if you were to combine every single trade that I made, it was up over 100% today in terms of all trades combined. And this was a nice green day for me that started out red. So in terms of like lotto trades, in terms of not trading the best setups, the best prices, there's 3 periods. There's market open, which is extremely volatile and the chart's less developed, so it's not as ideal. You're going to see a lot of flip-flops like this where the previous closing strategy, the previous closing price, the gap close reversal worked, but it was a delayed reaction. The strategy did work, man. The puts banked and I took advantage of that before it cracked again. So I made money back there, right? And then the midday is where the chart is more developed and it's more choppy. And then power hour is absolutely insane, man. Power hour is extremely high risk if you're doing 0 dates. If you're doing further expirations, then obviously it's not as risky because the contracts aren't going to move as much. But those are the 3 periods, man. So if I'm having a bad half in the morning, I can make it all back in the middle of the day or make it all back in power hour. Now, if I'm having a good start to the morning, I'm not going to give it all back, man. If I take any more trades, I'm going to scale down in size and continue to cut losses quickly for the most part. But if I have a nice morning session, I'm going to scale down in size because I already did well. If I don't have a nice morning session, I'm just going to keep my size about the same. And if I make up for that and I do well and I trade power hour and I go red to green like I did, then I'm just going to scale down in size a lot, right? But in a sense, that's how you trade the best setups at the best prices. That's what I did right. That's what I did wrong. I hope you found this video useful. With that being said, if you do want to be a part of Trader Society, it's going to be the first link down below with the description. You get to trade live with us every single day. You can use this weekend as an opportunity to start learning how to master the gap trading system that I've created, to learn how to capture trends before they become massive trends. If you want to learn how to trade, it is that first link down below in the description. Once you join, it's a one-time fee, it's lifetime access. You can get started on your education and get started with this community right now, instant access. So I will see you guys within then. All the information is the first link down below in the description. On Sunday, I'm going to post a video with my SPY trading plan for Monday.